Good morning, everyone, and welcome to the Trade Talk podcast. In the US markets, we saw again one more upward activity. There was like bullishness in stocks like Nvidia as well as other IT companies, and that's the reason we saw the markets closing at the highest point of the day. But at the same time, if we go through with the overall data which is related to the economy, then there again some enthusiasm is coming in terms of cutting the interest rates, and that's the reason we saw some specific buying interest in crude. So crude prices were also on the higher side on a closing basis. Brent crude was around $75-76 some few days back. Now it is again back to the levels of $85, and NYMEX crude is at $82 per barrel. So in terms of global macros, crude prices are worrisome, but the bond yield is now at 4.22. For our markets, GIFT Nifty is indicating us that we are going to see higher opening by nearly 100 points. So in that case, we could see the levels of 23,600, 650. Based on technical setup, 600, 650 going to act as major resistance for the market. So the strategy should be to look for reducing some weak positions or leverage long positions between 23,600 and 700 levels. In case if there is any correction, then the market should not break the level of 23,500, because in that case the Nifty may fall to the levels of 23,300 or 200, where the market has left price gap. So broadly, we are of the view that if we see the market is opening higher to the resistance level, we need to be careful, at least for adding index futures or positions on indices. But stock specific activity is going to continue and going to rule the market. Yesterday we saw again one more session of buying interest in defense companies. Today we may see some buying activity in railway or infra companies along with private banks, because while closing we saw good amount of buying interest in the Bank Nifty. As we discussed on Tuesday, Bank Nifty is now comfortably trading above the mark of 50,300, which is positive. Now the next level to watch out for would be 50,800 and 51,150. FIs have also started infusing funds into the market since last 5 days. If we see the net figures, then they have turned net buyer in the market, and that's the reason we are seeing buying interest in stocks like HDFC Bank, ICICI Bank and few other private banks. So for the Bank Nifty, till the Bank Nifty is above 50,200, we can expect upward bullishness up to 50,800 and 51,150. On the downside, below 50,200, again we can see the levels of 50,000, and in the worst case scenario 49,800. BFSI stocks should be on the watch list, along with NBFCs, private banks as well as PSU banks should be on the radar, and oil and gas stocks may show some further buying interest, as stocks like ONGC, Oil India can do well whenever there is upward activity in the Brent crude. We see specific buying interest in these two stocks. So we need to focus on Oil India as well as ONGC, and from the consumption space, Zomato should be on the radar. That's all from my side for the day. With this, I am ending today's morning podcast. Thank you very much for listening me, and have a great day to all of you.